What's up, YouTube? Welcome to another video. Today is June 4th, 2023. Quick disclaimer, I'm not a financial advisor, so please do your own research and consult with a financial advisor before making any investment decision like buying gold, silver, or pursuing any of the investment strategies I discuss on this channel. The channel is for entertainment purposes only. First things first, guys, I just want to send a big shout out to Numismatic Stacker. A couple weeks back, he did sort of a shout out video about when I mentioned I sold some of my gold and silver there, basically, which seems now it was at the top, at least in the past month. I knew I'd kind of take a little bit of heat from selling. Typically the gold silver crowd is pretty religious when it comes to this stuff, and I like gold and silver, but I also like to make money. And but anyways, yeah, he kind of backed me up on that decision, and I appreciate it, and I appreciate the shout out, and the extra I don't know, spotlight on my channel or whatever. I really appreciate that. If you guys haven't done so already, go check out his channel. He's always going on about different coins and stuff like that. He goes to tons of coin shows and seems quite knowledgeable, especially with US coins and that. Check him out, Numismatic Stacker, and the link will be in the description below. So on to some other news. Well, we had, with this debt ceiling debate in the US in the past week, we've had gold and silver sell off dramatically, then surge, and then only to kind of sell off on Friday again. So gold's in there about 1969, silver 23.74, down quite a bit from the $26 mark, which is when I sold my Sprott physical silver stuff. Oil's up 71.74. It had been down to about $68 or something like that earlier in the week. Bond yields have surged. We're at almost 3.7 on the 10-year. Crypto, Bitcoin's kind of at 27 and change. It's always kind of changing. Canadian dollar has gained a little bit of ground on the USD. And just kind of lots going on. Of course, the Dow and S&P surged on Friday. Dow's up 700 points, a little over 2%. S&P almost 1.5%. And of course, that was a couple things. Number one, the debt ceiling debate or the bill was approved. It was fast tracked through the Senate. I saw Biden signed it yesterday, and it basically suspends the debt ceiling for a few years. So I don't want to get too much into it because, to be honest, guys, I didn't really read a whole lot into it. To me, this is all kind of smoke and mirrors, kabuki theater, was kind of what everyone's saying. I've been, hearing about the debt ceiling really since Obama back in, I think it was 2011, 2012? Anyway, I remember John Boehner was blocking it in the House of Representatives. It was just this huge thing. And again, under the Trump presidency, when Nancy Pelosi was blocking it, I think that would have been in 2018. It always gets raised. It always, resolves itself. More and more debt needs to be created, and it's very unfortunate. But that's the way it is. I'm not going to complain about the way the world is. I'm just going to try to understand it as best I can and try to hedge and trade around that stuff. The other big thing was jobs numbers came in. I think 350,000 roughly. It might be 335. It could be 370. I forget the exact number. But as we saw in prior years, you got to be very suspicious about these job numbers, non-farm payrolls, because they come in and, let's say it was 350,000 on Friday. It was pretty close to that. So, oh, wow, that's a great number. That's fantastic. The job market, labor markets are still holding up. Only they get like downwardly revised like 6 months later, right? So anyways, I always take all this stuff with a grain of salt. What I basically try to do is focus on my own kind of circumstance, like, how much are groceries? What does gas cost? How is inflation impacting me? And then you can kind of extrapolate that out to how it would be impacting other people. And it's not hard to see that these higher interest rates are really hurting people, whether they're on fixed rate mortgages that are coming up for renewal here in Canada, variable rates, they're already screwed. We are headed towards a major housing crisis in this country. And there's just way too much debt. The Bank of Canada is always concerned about the level of debt that Canadians have, and I kind of think they're secretly hoping that we're going to get a pretty major recession so that they can dramatically lower interest rates. But again, it's like you can't keep kicking this can down the road. Houses in my area, you cannot find like maybe a townhouse for under $1 million. And even those are at like 7 to 1 million range. Actually, I'll probably even say 8 to 1 million. That's for like a small 3 bedroom townhouse. So, you know, I feel like this is the end. Kind of like that Doors song. This is the end. um, we just can't like $1 million for anything is quite a lot of money, and especially in this country, wages have not kept up with the rapid appreciation of housing. Um, and now I'm seeing a whole lot of I wouldn't say a whole lot of, but you're seeing a lot of like rentals come for sale. um, I feel like these are investors who have played the game for the last 20, 25 years, and they know when it's time to get out. And now is definitely the time to get out. They keep saying that because we get all this immigration, we have a major housing supply shortage, and that's going to support prices, and that may very well be the case. But I do think that at the end of the day, economics in a debt spiral or collapse is going to trump traditional supply demand metrics for housing markets or whatever. Um, you can have a very low supply of housing, but if people are out of jobs and cannot afford that, and existing homeowners are delinquent on their mortgage and they're getting foreclosed on, you're going to have a lot more supply come to market and with no buyers. So I do think that this is this is kind of on the horizon. And in Canada, especially, it's been a long time coming. It's been a long time coming. I've been reading about this housing bubble for like 15 years now. And that just goes to show you, markets can remain what's that saying from Ben Graham's book? Markets can remain I don't know, crazy longer than you can remain solvent and stuff like that. But we are starting to see it in the bank. Our banks reported, and they're increasing loan loss provisions, so they kind of see some trouble on the horizon. And that's not that even meant, that's just mortgages. Never mind all the HELOCs, personal lines of credit, credit card debt. There's just, groceries here in Canada have really not come down whatsoever. They're actually, still high. And that's stuff that's really not going to change. And that's affecting a lot of people. Everyone needs to eat, and that's hitting everyone's bottom line. So I do think that, we're still in this, blissful ignorance phase of where this is ultimately headed. And I keep saying this, it doesn't have to be something internal to Canada that could bring down our markets and our economy. It could be something external, namely, a big recession in the US. Canada, like the old thing, the US sneezes, Canada gets a cold. We could go down hard. And anyway, unfortunately, we haven't done some things the past few years that we should have, namely build more pipelines to be able to supply our friends and allies with cheap, uh, green, Canadian energy, whether that be oil from our oil sands or natural gas or any of that stuff. And, we produce this stuff with the most stringent of standards. It's ethical oil, ethical energy. I think that should be, Canada's new thing, new kind of saying. We produce ethical energy. We're not a dictatorship here, although it may seem like that from time to time with our current prime minister. But I don't understand why our energy sector has been so vilified when you see what other countries do. Um, you know, Iran, yeah, they produce oil and gas, and then they're, producing nuclear weapons and stuff like that. They're a threat to global stability and whatnot. Russia, let's all buy, cheap Russian resources and support, Putin. Um, I, but yet, when it comes to Canada, shame on us for doing anything. It's the most ridiculous notion I think I've ever heard. I think, looking back, Canadians are going to really, really bear the brunt of what's coming. Namely, because we've decided to invest in nothing but crap shacks and McMansions that are like the worst built homes, I think, in the history of the country. Like, nothing is built of quality anymore. It's all cheap and crappy. But anyways, I could go on forever about kind of all the stuff that's bothering me. But I do want to say, on a positive note, I was happy to see gold and silver come down. I have been buying, especially some of the miners. Man, those guys went down hard. I mean, Newmont was $70. That's Canadian. Now it's down to like 55, 57 range. I own some Newmont. Back into that. Um, and they just merged with Newcrest, so they're going to be the largest gold producer. And that may not save us if there's a major stock market crash, but I do think that, like, some of these, like, the mining sector seems pretty cheap. And I mean, I'll admit, I haven't been playing in the gold and silver sector for decades or anything like that. I've been in it maybe 3 or 4 years, something like that. And uh, it's not as cheap as 2015, 2016, but it's down there, especially given where we are. Um, I'm looking at some oil pipelines. I'm looking at Enbridge and TC Energy, which is the old TransCanada pipeline. Suncor Energy, Cenovus, Canadian Natural Resources. All of these stocks, they were kind of down. They were kind of getting into, like, I'm kind of interested in nibbling a bit more. I've been slowly averaging into some of these positions, but I mean, I'm not dumb. I know what happens. In 2008, look at where energy was. Look at where our mining and copper and all that stuff was, and man, that came down in a hurry. So you could really kind of lose your shirt if you're levered into it. And by the way, I'll just say, I never invest on margin. I don't like it. I don't like to be in a position where any of my investments could get called away, and I could suffer a loss at the worst possible time. So I invest with my own money that I work hard to save up, and if a position goes against me, I kind of reassess. And I guess it's a matter. All investing is like this, guys. So here's a good little tidbit of information. Understand what you own and know what you own. And because when stocks go down, and a lot, you need to ask yourself, am I happy owning these things? What do I own, first of all? Like in the case of Newmont, let's use that as an example. Well, what you're buying is the largest gold producer on earth, especially now after the merger with Newcrest. Um, I think their all-in sustaining cost is maybe, I don't know, 1,200 an ounce or something like that. Well, you look at today, it's, gold's at 1970. I don't know where it's going to go at the end of the year. Maybe 1,600, maybe 3,000. Who knows? But there's a stock that's proven. It merged with Goldcore back in 2019, which is another great gold company. These are good long-term stocks to hold in a sector that, if we are heading into the type of environment that many analysts, not just me, are thinking we're going into, this could be something that's going to really outperform. And I mean, it's not like a small speculative, what's it called? What's the word I'm looking for? It's not like a junior gold stock here. This is like, a senior or large cap miner. And it's going to be kind of a go-to name, probably along with Barrick and Agnico Eagle, when the big money from hedge funds and from the big investments come into the sector, right? So that's just kind of what I want to use there. Something like Suncor Energy. They've had a raft of hard luck. It's kind of like a turnaround story, but the assets are good. They're there. They got probably what 20, 30 years of asset life in the heavy oil, and who knows how much in light sweet crude and in nat gas and stuff like that. That's it's a story that's sort of working itself out, and that's basically what you're buying these things for. You know, you're getting a long-lived asset of a commodity that the world desperately needs, and it's going to be in high demand, and it's in a very safe, secure jurisdiction, at least like in a geopolitical sense, than other sources like the Middle East, like Russia, and some of the places in Africa and stuff. So just kind of know what you own pipelines. It's hard. It's almost impossible to get a pipeline built nowadays. So any pipeline that exists in place today is worth its weight in gold. They're kind of like the only game in town. They're kind of like the railroads. These are monopolies and that. And so I'm thinking of Enbridge. I'm thinking about TC Energy and that type of thing. There are others that are probably all well. But if you look at kind of what Warren Buffett's doing, he's going for that Occidental Petroleum. I think he has Energy Partners pipeline or something like that too. I mean, he's kind of going big into commodities and that. And yeah, anyway, maybe it's because as a Canadian man, our stock market is virtually all commodities and financials. So I'm pretty, imagine Australians feel the same. We're used to our resource stocks and oh wait, this just announced OPEC Plus sticks to 2023 oil production targets as Saudi Arabia announces further voluntary cuts. Okay, we're off to the races with oil, ladies and gentlemen. If they're going to be cutting supply, you can bet that they're going to put a floor under oil for the time being, at least. What's that going to do to inflation? It will kind of basically keep it pretty sticky, because energy is a major input cost into anything that we produce, use, do, whatever. So it's a really tough time to be an investor now. Even the pros don't really know. I saw Druckenmiller a couple weeks back. He said he can make a case for deflation going forward and inflation. And there's problems in the banking system. There's too much debt in the system. It just kind of feels that this time may be different. It's remains to be seen if central banks can manage all of this, because it seems like they're trying to pursue policies that are in direct opposition to each other. They're trying to raise rates to fight inflation, yet in so doing they risk collapsing the huge debt bubble. So and it's unclear whether or not they can get Humpty back together again. That's the thing too. That's another takeaway from the Druckenmiller interview. He's like, if they do manage to burst all these bubbles, and they will all go simultaneously, it remains to be seen if it can get put back together again, or if the losses and damage will be so deep and so scarring. Back in 2008, that was their big concern. They wanted to try to prevent like deep scarring of the economy, and it took probably 4 or 5 years for it to it was called the jobless recovery. Things, there was a very muted recovery, and that was fueled with trillions in QE and all sorts of shenanigans. So I personally don't know. I do know this. I do like gold and silver. I was hoping silver would fall a lot more, kind of where it was back in the fall. Maybe it might yet, because I do want to pick up another tube of these Canadian maples. and the price needs to be right. And the other thing is, I'll finish up with this thought. It's it's about when investing becomes your religion, you're probably gonna lose big. Um, and That's kind of my thoughts. A lot of people in the Bitcoin space, that was their religion, and enjoy being poor and this and that. And look, they got wiped out. Um, the same thing can be said with the silver squeeze and stuff like that. Everyone's going crazy buying silver, and it's there's a lot of bull cases for silver. I love silver. I have a lot of silver, and I'd like to get some more, but at the end of the day, silver is going to go down massively if we enter a recession, and so you need to be prepared for that. um, if you want to buy something and hold it and you don't care if it goes up or down, that's fine. I have a portion of my own investments in gold and silver and physical that I really don't care where the price goes. I mean, I care to some degree, right? No one likes to buy something and see it half price, right? Then you think, oh man, I could have bought double what I got. But my approach to this has just been try to keep 10% of your liquid net worth in physical gold, especially. Um, and and the rest will kind of sort itself out. I look at it, if my gold and silver, if they go down, then that just means my other investments, my stocks, and my financial assets, they're going to go gangbuster. They're going to be doing very well. And that when they do poorly should be when this stuff really starts to shine, so to speak. So that's been sort of my approach, and I'm just trying to, I don't want to be married to this stuff in the sense that, gold's going to go up because the central banks are manipulating the system. The whole system's going to, yeah, that's old news. That's been going on for 30 years now. I watched an interview with Egon von Greyer's, pretty smart guy, but he's been doing this since 1998, 25 years waiting for this stuff to happen. And it still hasn't happened. That goes into, um, when something is likely to happen, it doesn't mean it's imminent, right? Or I guess, Rick Rule says, just because something is inevitable does not mean that it is imminent. And it can take a very, very long, there's so many things that they can do to kind of prolong it. Even now with this whole BRICS stuff that's going on, they're trying to form sort of an alternative trading unit of currency to the US dollar. And some say that might be backed to a degree or fully with gold. That may or may not be the case. That may or may not work. We don't really know. The future is always sort of ultimately unknowable. And I think a big danger that investors can fall victim to is thinking that they know what's going to happen and going all in on an idea or on a stock or on a sector when the absolute opposite could very well happen. So that's why I hold a lot of cash. I got a lot of money market funds. I got a lot of short-term cash holdings. I got some bonds. I got all sorts of crap like that because I don't know if this stuff is really gonna do its job, in the near term. Maybe something crazy will happen and there'll be some really killer investment opportunities, be it in the real estate market. I wouldn't mind owning some rental properties again, at the right price and in the right jurisdiction with the right, wind at its back. Same with some great dividend paying stocks. I'm not against owning bank stocks. I'm just against owning bank stocks going into like a major, major recession where there could be massive losses, where banks can go bust and stuff like that. You don't know. But on the whole, Canadian banks have been a pretty decent place to invest for the last 200 years, guys. So, they're going to pay you those dividends. That's not to say bad things can't happen. And that's not to say that this time is different. We could, in Canada, face, the loss of a major bank. I don't think that that's completely out of the realm of possibility. I don't think it's probable, but it's possible. And I just want to kind of wait till I see better prices. I mean, prices dictate kind of almost everything that I think and do. When the TSX was at 12,000, I was having a great time investing back in 2020. Well, now it's at 20,000. It was at 22, 23,000. I mean, that's just not that enticing. The S&P 500 at 1,500 was a lot more enticing than it is at 4,300, you know? So that's the kind of thing that people need to think about. There are no great stocks to be in and out of, and especially if you're just an average investor, if you're not somebody who really understands and trades markets, then the best thing to do is just wait till you have, a screaming buying opportunity. And right now we just don't. I've seen one before in 2020, and I've seen one before back in 08, 09. And I was closing my eyes, buying S&P funds or ETFs or whatever, and you know, week after week, I just watch it go down a bit more, buying, 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 buying. I was buying those things at like $18 today. They were over 100. I made 5 times my money on those buys, right? That is when you see um, some real opportunity. So I'm going to end it there, guys. Thanks so much for supporting the channel. Once again, thanks so much to Numismatic Stacker for paying it forward with that shout out video. Right back at you, brother, man. I got a link in the description below to your channel. If you guys are interested in buying gold and silver now that prices have come back a bit, I got a link down for silver gold bull. It's typically what I use to buy my straight bullion. And that's it for today, guys. Like, subscribe to the channel, check out my website, My Road to Wealth and Freedom. It's in the description below. Happy Sunday, everyone.